Has silver's wealth cycle begun? So you guys probably already seen this news that China recently purchased nearly 300 tons of gold and that the Shanghai Gold Exchange is going to be used for the Saudis for its yuan to gold transactions. And it's likely that everything China's been doing in accumulating gold is to provide liquidity to this market. And Professor Richard Werner commented on it and said the move towards two trade areas intensifies with the non-dollar area growing. Now, Professor Werner, he's not an Austrian economist, but actually his theories and whatnot are quite similar. There's a lot of similarities with Austrian economics, which he doesn't actually realize. We've had some debates, he and I, in the past over equilibrium, where he made the claim that Austrians believe in equilibrium, where we clearly don't, and I shared actual evidence and proof. But pretty much very similar theories. So I recommend following Professor Richard Werner. I do rate him as one of the global experts when it comes to the banking and monetary system. So I think the bifurcation is going to continue in 2023. But if we have a look at 2022 performance, US dollar index up, you can see silver was up, gold was flat, but it outperformed. And this is the thing, this is this wealth cycles, which we're going to talk about in a second. When you compare that to real estate, the S&P 500, treasury market, NASDAQ, well, your silver is buying a lot more NASDAQ, okay? And 2023, I think, is going to be a very good year for both gold and silver. What's gold now at about $18.40 an ounce? Silver's back up over $24 an ounce. I hope you guys that follow this channel went and bought silver back when it was under $20 when I was saying and sharing when I was buying and accumulating a bit more silver at those prices. So, and I believe that we are seeing the beginning of another, or we've already begun another wealth cycle. And keep an eye on this. When mainstream media is starting to talk about gold and silver, here CNBC, gold surges to 6-month high, and analysts expect records in 2023. This is when you really start to get other people coming into the gold and silver market. And then obviously the big boys don't want to miss out on that action as well. And what we find, I won't go down there. Anyway, so keep an eye on mainstream media. If you see more and more of these type of articles, we're going to get a big surge into this sector. So I did this video some time ago called Wealth Cycles, where I explained what a wealth cycle is. And in the video, I share how I stumbled upon wealth cycles. So I kind of fluked it, if you will, about wealth cycles. And this is where you measure one asset, not in terms of dollars, but in terms of other assets. And so as one asset either holds its value or goes up, while another asset is crashing or falling, then the asset that you hold can buy you more of the other asset that's falling. And then things move in cycles, and then you go back and forth. And in this video, 68,000 silver bought me 6 homes. I shared my story of stumbling into this wealth cycles where I purchased $68,000 worth of silver, and that actually turned into almost $800,000. So $68,000 in silver turned into almost $800,000. By the way, look at that hairdo. Some say they want me to cut my hair, and I probably will soon, but it's getting a bit annoying. But fair dinkum, look at that hairdo. What we'll do now is I'll just cut to a little short 3-minute clip from this video where I share my story about well cycles, how I stumbled upon it, and how I turned $68,000 into almost $800,000 today. So let me share my experience with wealth cycles. So I've shared this in previous videos. In 2008-09, I bought silver. I bought silver at $10, $12, $13, $14, and $16. I just bought it in different tranches. It wasn't exactly $10 on the spot. It might have been $10, $23, whatever. All up, I bought about $68,000 worth of silver, and the average buy price that I've worked out was around the $13 mark. In early 2011, while I was sitting in my office in Ipswich, which is west of Brisbane here in Queensland, Australia, a Scottish man came to my office and wanted to sell me cheap US cash flow real estate in Detroit. And the houses he was showing me and the numbers on it, were just incredible. These houses that were dirt cheap, paying, 25-30% gross rental yields and huge net yields, and I was like, holy smoke, I've never seen returns like that in real estate before. Coming from Australia, we've got very expensive real estate. You just don't see those type of yields. But I had my doubts because I knew Detroit had a lot of issues back then, and I met a colleague of mine in my industry who had already started buying US cash flow real estate, and he had made a bunch of mistakes, bought in the wrong areas, had issues with property managers, and you name it. So I got on him very quickly. He shared his story with me, and next thing I know, in 2011, I started selling my silver. And I started selling it at $43, $44, and $46. Now that $46 was actually on the way down, so it went up to $49. I sold it on the way down. I wasn't selling that part on the way up. And so, look, I got a bit lucky. Had that Scottish man not come, I probably might have held my silver, because at this stage I didn't really know what wealth cycles were. And so there's a bit of luck, bit of good timing. So I sold my silver for approximately $232,000. At the time, I then sent these funds over to the US at an exchange rate of $1.04. So the Aussie dollar was above parity. So it gave me about $241,000 US dollars, where I bought 6 cheap homes in Atlanta and Memphis. With my first townhome I bought in Atlanta, cost me $29,000 for a 3-bed, 2-bathroom townhome. You can't even buy a bit of a crummy second-hand car here in Australia for that. Now, all these properties are worth approximately about $115,000 in Atlanta and about $75,000 in Memphis. Now, I have been, and I've shared this before, I have been selling these properties into this bull market. I've got the rest of my Atlanta properties on the market at the moment. Memphis ones I'll probably hold on to. I like to hold on to something. So I turned $68,000 in 08-09 to assets worth $788,892 in Aussie dollar terms today, using these wealth cycles. And so I think we're in the process of another wealth cycle, and I think risk on assets like stocks, real estate, etc., are going to fall significantly. And I think gold and silver will perform very well, especially measured against those assets. And so, you guys have seen this chart. I've shared it over and over again. All the different largest declines in the S&P 500 versus the performance of gold and silver. And yes, you could argue that gold has actually performed better in this case. But silver has as well, except for twice. In 1980 to 82, and well, you can argue that it did perform better than the S&P 500 in Feb March 2020, but certainly did in the next several months after that. So based on my thesis, I think central banks are going to continue to raise a little bit more. I think there's still a little bit more left there. Perhaps they leave leave it on hold for a little while, but I think we will see some significant falls before the Fed and other central banks pivot. Now, I wouldn't rush out and buy stocks straight away, because history tells us that even after the Fed pivots, stocks continue to crash, and on average, 28% over a 14-month period. So be very, very careful. Obviously, I have talked a lot about a 1973-74 style recession. You can see that after the Fed pivoted, that crashed another 41% over an 11-month period. So, yeah, timing is difficult, but just be careful about, as soon as the Fed pivots, then jumping back in. They're only going to pivot when there's severe pain, but that pain don't stop straight away. It continues. So, yeah, just keep an eye on this. But the interesting thing is, bullish as I am the underlying metal, gold and silver, physical gold and silver has done well. And, I've shared that so far in this video. It's the miners that are even cheaper, based on the underlying metal. The miners have been beaten down, and juniors even more so. So in this, over the next few years, as I believe we see this wealth cycle play out, I think the big asymmetric trades or bets will be in the mining space, and in particular in the junior space. Now, have a look at this when we compare market size or market cap. And this is from Katusa Research, this chart, so thanks to them for this. Look at silver miners compared to the others. I mean, you can barely see it there. So it's so small. And you're not going to need a heck of a lot of fund flow into that sector, where we're going to see 10x returns, 20x returns. So I'm talking 10, 20 baggers, big asymmetric returns. And we've got history on our side to prove that this is the case. I've shared these charts before, but in the May 03 to March 08 bull market, where silver went up 332%, so it was a 3-bagger. Had you bought Pan American Silver, that would have been a 5.5-bagger. Endeavour Silver, a 20-bagger, that's over 2,000%. SSR Mining, there's a 6.5-bagger, or Mag Silver, that's a 25-bagger, 2,500%. Or Wheaton Precious Metals, a 5-bagger. So you get the right silver companies, and you're going to get a much bigger asymmetric return than the underlying silver price. And then in the November 08 to April 11 bull market, when silver almost hit 400%. So the underlying metal, 400% return. Hecla Mining, 730%. Endeavour Silver Corp, 1,150%. So there's an 11-bagger. Wheaton Precious Metals this time, 1,400%. That's a 14-bagger. So you can see you buy the right silver miners, and that asymmetric return is just huge. And so, yes, you want the physical, absolutely 100%, you want the physical gold and silver, but you want to put a bit of your portfolio to really get that asymmetric return in the silver and gold miners, depending on your risk, where you want to go in terms of, the juniors. There's a lot more risk in that space. You don't have to go in that space to get really good asymmetric returns. But yeah, it all depends on your risk profile. We do like investing in the junior space. We like investing in the exploration space. And, for our Finance Uncut insiders, you guys get my reports, you get my portfolio, you see exactly where we like to invest in that exploration cycle, moving into development and then obviously producer. So we do like this space. We do find really good asymmetric returns in here, but it's not for everybody. I'm happy to buy a exploration stock and see it halve in value. More than happy for that to happen. Most people cannot handle that, and so this space is not for them. However, you get the really big asymmetric returns if you get it right. And one stock that we really did get right was Chalice. And in early 2020, it was trading at 17 cents, which we bought at that price. In fact, it was trading at 11 cents. We got in at 17 cents. Actually, today it's trading at about $6 something the last time I looked. So this is an old slide. All-time high of $10.48, November 2021. $10,000 investment in 2020 would be $532,000 today. That's based on that $9 price above, or $616,000 at its all-time high. So that's that asymmetric return. That's where you get the big multi-baggers. Personally, we invested $10,000 into Chalice at 17 cents and turned that into $254,000 when we sold at $4.33. So we took profits on this one. And then, we shared our returns on our coal stocks as well. Our coal stocks actually have performed exceptionally well. We've had 2 10-baggers in our coal stocks and a few 4 and 5-baggers as well. So if anyone is interested in joining Finance Uncut Insiders, it is a weekly report which we just share our portfolio, our research analysis based on our portfolio, our watch list, what we're looking at, when we're buying, when we're selling, and I just give my market commentary and things that I'm looking at. It's not financial advice. It's not a recommendation to buy or sell any asset or security. You just get an inside view into what I'm doing personally in my own portfolio. We are going to close Finance Uncut Insiders off in the first quarter of this year. After that, we're not going to accept any more people into the Insiders report. We're just going to keep this a closed, small group community because I do get a lot of emails back and forth from everyone, and I don't want this to grow into a big thing because I won't be able to get back to everyone. So we are going to close this off in the first quarter of this year. So if you are interested, it's a weekly report, $365 for an annual subscription to this report. So $1 a day, and you'll get this weekly report with all of our portfolio. So you get 52 reports throughout the year, and that's what you get. So if you are interested, send us an email below. We'll give you a bit more information about what the report looks like, etc. And if you're interested, let us know, and we can get you onto that. But we are going to close it off sometime in the first quarter. I don't know if we'll close it off next month or the end of March, but we are going to close this off to anybody else soon. So that's $365 US. I don't know if I mentioned that. It's in US dollars for an annual subscription to this weekly report. But if you don't want to invest that money into this Finance Uncut Insiders report, then we've done a few videos that we're trying to give a lot of education. One of my favorites that I've done is Crisis Investing Gold and Silver. I learned a lot from people like Jim Rogers and Doug Casey. And so in this video, I just shared the key ingredients that I learned from Doug. And a video I did very early on in when I started this channel is investing in gold and silver miners and explorers. And you'll probably notice from the quality of this video that it was done very early on. Where in this video I just share the basics around drilling and exploration and things that we look for. And I shared another link to another really good resource. So if you are interested in learning about investing in the exploration and that junior space, then check out this video. I'll put links in the description below to the well cycle videos as well as these 2 videos. And I'll continue to put out videos on this channel throughout 2023 to provide more education for you guys so that you can become better investors and understand the macro landscape and economics in general, but without giving any financial advice. Anyway, guys, that's it for me. I hope everyone has a great 2023. Looking forward to communicating with you guys. If you like this video, once again, do appreciate you hitting that like button. Love to see your thoughts and opinions in the comments below. Take care, everyone. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.